Hey everyone, Jeff Dorman, Chief Investment Officer at ARCA, back again for another edition of That's Our Two Satoshis Live, where we talk about all things digital assets. For those who were hoping that I would have a guest today, I apologize. It's just going to be me today. So you'll just have to hear my thoughts, but we'll be back again next week with a guest. Before we get started here, as always, this is not meant to be investment advice. We are simply going to talk about the markets like we have been doing every week for almost 6 years now. Actually into our seventh year, talking about crypto markets. You can catch our actual blog on our website, ar.ca/blog. So what's happening in the crypto markets? It's not great. Quite frankly, we just finished the second quarter, pretty dismal second quarter. Some interesting stats. Bitcoin finished the second quarter down 12%. The Bloomberg Galaxy Crypto Index was down almost 17%, and that includes a pretty heavy allocation to Bitcoin and ETH. The inverse of that would be the S&P Crypto X Megacap Index, which excludes Bitcoin and ETH, and therefore contains mostly altcoins. That was down 30%, and the S&P 500 finished the quarter down up 4%. So pretty interesting bifurcation there between equities and crypto. We've always been on record saying the correlation is pretty spurious. It changes all the time. You wouldn't expect a real negative correlation per se, but again, it just shows that this is a market that does move sort of independently. I think what's really happened in the second quarter, though, is you probably had the best news ever in digital asset history. Certainly in terms of longer term, what it means for the industry with regard to ETF approvals, regulatory softening here in the U.S. Even potentially a higher probability of a Republican in office at the end of the year here in the United States. Also, tons of tailwinds with regard to new sectors and products coming out of gaming, RWA, AI, DePIN, SocialFi, et cetera. All of that being offset by some real short-term supply concerns from the Mt. Gox tokens that are coming back to the market in the next week here, from the German government and the U.S. government having seized coins and offering it out to some of these VC unlocks and new issues. Certainly never a guarantee that prices will rebound, but this is about as safe as a bet as we've ever seen in digital assets with regard to positive news and negative price action. Usually you want to buy when you have positive news and negative price action, and you want to sell when you have the opposite. So, you can even see this. I didn't actually put it in the blog, but you can see this if you go to a great website like velodata.app. And you can see options skew, for example. 1 week, 1 month options skew very negative, meaning puts are more expensive than calls. People are protecting against the downside. Whereas if you look at 3 month and 6 month put call ratio, it's the opposite. Calls are more expensive than puts, meaning most market participants agree with what we're saying is that long-term positive, short-term negative. I think the negative was a lot larger than most would have expected given the positive news. Elsewhere, what we're seeing in the market is, the SEC again still back in the suing everyone phase. Sued Consensus last week, alleging that MetaMask swaps and staking products violated federal security laws. They also said that Ethereum staking services, Lido and Rocket Pool, were also unregistered securities. Look, this is tiring. We're all kind of tired of this, certainly. Here's the playbook for the SEC said something's a security. Number one, securities aren't illegal, so it doesn't matter. It's okay to invest in securities. I buy stocks, I buy bonds. Securities are fine. It's only illegal if you are an issuer of a token or an exchange allowing you to trade those tokens and you don't follow specific rules. So there's different rules and disclosures needed if you're going to issue a security or you're going to help facilitate a trading of a security. But all the issuers and all the exchanges have been fighting back all year, often winning in court cases. So as a result, the exchanges are no longer delisting tokens when the SEC says they're a security. The issuers are no longer living in fear. Said another way is you can ignore this, right? It doesn't matter what the SEC says right now. It's not going to have a broad impact for that reason. It only affects the issuers and the exchanges, and they're fighting back and don't believe the SEC is accurate with their assessments. So much ado about nothing, again, from a price action standpoint. What is having a much larger effect on the market, though, is these constant airdrops and unlocks of tokens. So, we've been talking about this a lot. We've actually written 3 or 4 different blogs over the last couple of months talking about what's really wrong with this setup. And a lot of it is because of regulatory reasons. If you go back to the ICO days of 2017, ICOs worked really well, right? There was certainly some fraud. There was certainly some that didn't work, but overall the structure worked, which is early stage projects sold tokens to its community. Therefore, there's a market clearing price that people are willing to pay to buy it. And as a result of them getting pretty low valuations and being early, even though there's a low probability of success, it did create sticky users. It created evangelists. Basically, it aligned the growth of a project with the community, who both get social utility and financial gain from the success of the product. You fast forward to today, and ICOs are deemed illegal, so the market had to adjust. And the way we adjusted is just killing the market, in my opinion. All these token sales are now done via private 144A transactions to accredited investors and qualified buyers, i.e., VCs. So the VCs are getting all the early stage tokens. They're getting these massive lockups that all unlock at the same time. They don't do anything to help. They don't do anything to help the project succeed. They don't create a community. They don't align the customers with the long-term value proposition. Basically, it's eliminated the community's ability to benefit early, and it drives up prices in the private market before retail can participate. And then when these tokens ultimately come to market, the VCs have so much power and control over the exchanges and the market makers that they mark these tokens way higher. They come to the exchanges, they go straight down. And rightfully so, retail investors are balking at these high prices because nobody wants to buy something at $1 billion or $2 billion valuation when they haven't done anything yet. So that structure just not working, right? If you are selling to a VC in the private market, just know that you're probably going to lose your community and never get a community, and you're going to have your token go straight down when it prices. Another way is airdrops, right? Problem with airdrops is even though it's fun to get free money, most people value things based on what you pay for. Think about anything you've ever gotten for free. Do you value it as highly as something that you paid for? Of course not. You value it for what you paid for it. So if you get an airdrop, you don't value it, and there's no long-term growth there. So, I was a capital markets banker for a long time. I've been talking at length about all the problems with the market. I'll just flat out say it. These 144A transactions and these airdrops are killing the market. We did discuss a few months ago some potential fixes. I think one of which is simply, listing tokens on exchanges much faster. And even if it takes a longer time for your token price to go higher, it will eventually go higher versus being dumped the second it goes public. But, for now, just know that, until this gets fixed, it is going to weigh on the market. So, with that, I think, there is definitely reason to be optimistic about the future. But the short-term supply concerns are real, and it's weighing on prices. This has historically not been a 4 or 5x beta asset class, which is what we've seen over the last couple of months, meaning Bitcoin and ETH down single digits because they have the inflows of the ETFs, whereas everything else is down 30 to 50%. That's a much bigger dispersion than what you typically see in the market, which typically means one of two things, right? It either means Bitcoin and ETH are very overvalued and are about to go down pretty hard to catch up to the other tokens that have already fallen just as much, or you're going to see a reversal pretty quickly. And those reversals can be in the 50 to 100% gains to catch back up to where Bitcoin and ETH is. So my bet is on the latter. I think this sell-off is probably too far gone for what has actually been happening in the market. I also think with Mt. Gox, releasing $9 billion of Bitcoin into the market soon, not only is that not going to have as big of an impact on the market as people think with regard to the Bitcoin being sold, but it actually could be a very positive event for other tokens because most of these Mt. Gox creditors gave exchange addresses as their wallets to deposit their Bitcoin. Guess what? If you wanted to sell your Bitcoin for cash, you would have taken the cash outlay. The only reason to give a wallet instead of get cash is if you were planning on either keeping that Bitcoin or retrading it into something else. So most of the Bitcoin that gets sold, in my opinion, will be sold for ETH or Solana or you name your favorite asset in some other sector like DeFi or DPIN or Web3, you name it. So I think this is actually going to be a positive event for most of the market and potentially negative for Bitcoin. And I think you'll definitely see Bitcoin dominance fall as a result. So we'll see if I'm right next week or the week after. For those who want to read the thoughts that we have this week, obviously go to our blog, ar.ca/blog. For everyone else, we'll be back here next week. Appreciate you guys listening, and let's hope for a better market here soon. Take care.